revenues. Are they up? Are they down? If they're down, you're going to do less roads. I mean, that's just kind of where it is. And last year we were down 300,000. So we did less roads. Actually, they did a really good job of trying to get everything done on their list. But for 2025, if you look in that this far right column down here at the bottom, we are actually up $185,000 over the prior year. I don't go back any further than that. So we're up right now. We don't have a whole lot of other funds coming in, highway funds we have coming in, but there's not a whole lot going on there. But these are your major income sources that come from the state. So that's why it's important to review this and look at it and ask questions. Hey, I noticed we didn't get the highway distribution this month. Is there a reason why? And there probably is. Maybe there's a delay. The state sent out a message. But this is how you're checking to make sure things are happening within your financial statements. Okay. If you turn to your next page, this really breaks down your sales tax. It's a big page that has the very top. This is for your hard surface roads. So this is all your income that's coming in for road and bridge. The next section is for the jail debt service. And then the next section is for the new sales tax for the hospital. I tried to highlight the 2025 column so you can kind of see, but you can see that we're actually up in the jail sales tax. And that's compensating use tax and sales tax. So it's both. It's online purchases as well as local. So sales tax is actually looking really good in this second month. Any questions on this? I'm just giving you more comparison every year so you can kind of see how it's fluctuating from year to year. Another one that you need to watch very closely. And then if you turn to the next page, this is other major resources or revenue sources for the county. And so there was a couple of years ago, actually you can see it very clearly. In 2020, if you notice, we don't have any culvert sales. Well, that's not normal. So had somebody been doing this, they would have seen that there was no culvert sales going on. And so the next year, you can see it went up to 15,000, and it kind of stays pretty steady at 15 to 20. And so this is another way to make sure that your revenues are coming in like you expect. You have landfill receipts. You can see in 2021, we started to take a jump, and then it really got heavy in 23. And that is because we had a big business start bringing all their services to our landfill. With that also comes a cost because we have to transfer a lot of that to Allen County. So that's why your income may go up in landfill, but so are your expenses. So that's why we've had to do budget amendments every year because you don't really know what's going to happen. But that's why you do that. Mm-hmm. Chemical sales, that's for noxious weed. There was also a problem in the past. It's not reflected here where there was sales were real low. This would have been a real big indicator. If sales are low, you probably ought to start asking questions. The sewer district is the lake, and I can give you more history about that later on, but basically the city of Fort Scott actually sends out on their water bill a fee. Some people paid that fee all up front, and some people are paying it off over time to help us pay down the debt service for the lift stations and things that are out at the Lake Fort Scott. So raw sewage wasn't going into the lake. And so that was done several years ago, but we have to collect that to pay off the debt. We issued the debt, so the city sends us money every month so that we can pay the debt service.
Yeah, it's just blotched out.
It didn't, when I printed it, I didn't have the column wide enough. EMS services, that is one you want to look out very closely, because if we start having a dip below 800,000, we're in trouble. So we don't ever want it to get any lower than that, or we will not be able to afford that, or we'll have to levy more taxes. So that Terry and I watch that pretty closely. We meet often to kind of talk through that. As we get the set-off program really up and running, I think you'll see those numbers go up. The next one is the jail, and you can see it's fluctuated from years. Over the years, it's gone up and then it's gone back down. COVID had some effect on the housing. It went up really big last year, and I think they had some. They were bringing in prisoners from Wyandotte County. I mean, we started getting some bigger checks there, so you can see it came in pretty big last year.
And this is revenue that these individual things make on their own, right?
Mm-hmm. Yes, this is
untaxed money. This is
right. This is
service
revenue,
money.
right?
Actual revenue created. By
Yes.
the entity.
I mean, we've spent tax dollars, like for the culvert sales. You spent tax dollars to buy the culverts,
Right,
But
then
you're
you sell
getting
it back.
you're selling it back to the customer too. Chemical sales, you don't get the full amount back, but these are a lot of fees that we take in for our services. And then the last one is the sheriff's. And so I don't break down the sheriff's and the jail fees like I do some of these other ones, but it just kind of gives you an idea of what those funds are generating. This is probably one of the most important ones I think you need to look at, because this is where I trust everybody that works here, but this is where you could identify fraud if it was going on. And so you really need to be looking at these high revenue generating areas. So you will get this every month when we do a financial report. I've already got it built, so there's no reason not to give it to
So
you.
what you were saying about the EMS, if it drops below
800.
800,
Yeah, you probably ought to be concerned. And so see, we had a year where we were at 700,000. That was a year we were concerned.
so what's that mean when you drop below?
It means the taxpayer has to pick up the slack.
Yes. You have to
Means we're
levy
not
more.
getting as many service calls
Or you
few
have
collections.
a massive. At one point in time, we had $350,000 in outstanding receivables.
Right.
And so,
Yeah.
That's why I got permission to go after the set-off program, because they have been really beneficial
Good,
on
good.
getting the bad debt
yeah,
paid back to us.
yeah,
Okay, I
Yeah.
just want to see how I understand why it would drop.
yeah. It could be various reasons, honestly.
Right.
So, any questions about that page? And the last page on your financial statements for this month, there'll be another one that I'll bring back in, but Patty's been out, and so I wasn't able to get it completed because I have to have information from her. But this is your bank and CD interest over the last 7 years. Just to give you a comparison, you can tell where the interest rates went up. They went up in 23, which was great for our general fund. If those start dropping, then what that's doing is you're going to have to make some decisions, because we budget a certain amount, and I'll show that when we go through the budget document. You budget a certain amount, and I usually budget pretty conservatively. I don't budget at this 400,000 mark. So if you get more revenue, that's great. But if you don't, then you're going to have to make some cuts within that fund, and that may be mid-year. So again, another very important area to be looking at every month to make sure that we're staying on target. The last report that's not on here is securities pledged. And by law, you have to do that. You have to look at, and the banks are bound by this law as well. They have to secure the amount of money that we have setting in funds in their banks. And so this is all of our banks here in town that we have CDs in, we have cash, but they have to pledge enough securities to cover us. Plus, they have the $250,000 federal Yeah, the FDIC. So that gets added into it. And I'll show you that. We'll talk through that report another time. But that was an area that wasn't being tracked very well, and we had some violations, and the bank had a violation. And so we're being a lot more aggressive in getting that information more timely. So we'll have that for you in February. It'll be a part of this financial packet. So if you have questions on financials, please ask us.
You'll have it for us when?
Every month.
Oh, every month.
Yes. Yep, it'll be in your packets.
So
And
we
it'll
said-
usually be
we-
under consent. So if you have questions, pull it out of the consent and we'll talk about it, or call me, and we can talk through that as well. Okay. This is really just informative stuff. That's all we're talking about tonight. We're not going to get into major budget stuff. I'm just high overview. This next worksheet, I wanted to break it down. It's called your fund status report. It's the same report that was in your financial statement, but I want you to understand who is in charge of what funds. And so in orange, I've highlighted commission funds. Those are funds that you guys need to keep your eyes on. You set budgets for, you determine what's going to be levied in those funds. And then out to the side, I put all the fund, or actually what's highlighted in blue is budgeted funds. So by law, and we'll go through that here in a little bit, you have to budget these funds. All those ones that aren't marked are not budgeted funds. And I'll go into that in more detail
We
later.
can move that money anywhere we think we need it.
Sometimes. If there is a department head or an elected official's name beside it,
Right.
they are in their charge.
But I'm talking about the ones that are in orange.
Yes.
Like, just say, so
You have appraiser reserve fund. You could move that money wherever you wanted to.
if I,
It's in your charge. Now, he's going to come in here and say, hey, I need that money for vehicles, because that's what that's there for.
but if it could pave an extra mile of road,
You could take it. Yes. Yeah.
just,
But those are discretionary funds for the commission. But the ones that have, like the treasurer, county
Right.
attorney, the clerk.
once we hand
most
that
of the
money over
time-
to them, it's theirs.
Yeah, most of the time those are set in there by statute. So, but if you turn to the next page, page 1, 2, and the top of 3 is where your funds end. And I think this is where there's been a lot of confusion in the past. You can't look at this bottom line, say we have $8.9 million, because you don't have $8.9 million. Those are distributable
That's
funds.
everything all together, isn't it?
Yes. That includes your CDs, everything. So if we were to put a total line right here, that number would be a lot less. So that's what I wanted to point out is really when you get these reports, you're only looking down to the very first agency funds. For what you're required to really be over.
So we stop at the 257 then,
Yes, you do.
which we're really not over with. That's just the money we have to
Right.
hand over to the department head and,
Yeah. And they actually are collecting money to go into those funds. And they like I said, there's statutory guidelines on how those funds have to be used. This is a lot of stuff to take in, so it's homework for you. Please ask questions if you don't understand why things have been set up the way they have been. For instance, we have an NRP fund. And Matt and I have been on the phone with CIC many times asking them because a lot of people think that their NRP, it's all their taxes are abated at 95%. That's not how it works. It's certain taxing entities that participate. And when you fill out the application, it says they are rebated at 100%, but 5% of that's an administration fee that should be going back into a fund. Well, the problem with that is it's all setting in the NRP fund, And we are supposed to be doing a journal entry to move that money back out and into the appraiser's office for the administration of the program. But because we've had so many problems with that NRP program, we don't even know what those numbers are. So starting this year, we will start moving those dollars out. I've set up a spreadsheet for Matt to kind of go through and look at how it's calculated. So if somebody came in and says, I don't think my NRP's right, he can calculate it right there for them, and say, okay, this is what your rebate should have been. What was it? And we can compare. And then we can take that 5%, we know what that 5% is, then off that spreadsheet and start moving the money. So it's taken us a while, but we now have a process in place, and I feel like it's a good process. Questions on any of this? This is a lot to absorb. The main thing is understanding what's a budgeted fund and what's not a budgeted fund, and we'll get into that deeper here in just a second. So this next thing I'm going to pass around to you is a statute that tells you as the Board of Commissioners what you're required to do by law for the budget. And I've highlighted it. It is to apportion and order the levying of taxes. So basically you are the ones that create the budget. And so all the direction comes from you. It's right there in the statute. So you determine how much money goes to each department. You determine, you really are the keeper of the budget.
So this is where, if it goes, once you understand, or once you know what revenue neutral is, we either decide if we want to go there above it or below it. And that's what.
And do you know what, does everybody understand what revenue neutral is? It means
we're
you.
bringing in the exact same amount of money we did last year,
Yep,
Yeah.
that's exactly what it is.
to the penny.
Yes, perfect.
Means we didn't get a raise.
Yeah. The next one is, that I'm gonna pass out, is the law. This is where you find the law on cash basis. So it explains what cash basis law is. And basically what it is you can't spend what you don't have.
Right.
That's as simple as you can put it.
Probably a good way to live.
Yeah, and the job of the clerk is when we're running AP, is if the money's not there, we are to stop and alert and say, you don't have the money to cover this. A lot of times, I'm going to use Road and Bridge as an example. We know that we're moving money from, when we're doing big asphalt projects, we have to move money from the sales tax money over to cover wages in Road and Bridge, because they are actually the ones doing the asphalting. So there are some circumstances where we're making transfers, and we're fully aware of that ahead of time. So it might say it's negative, but it's really not negative because I got to do a transfer to cover it. So, but that's where you find cash basis law. That's one law you have to worry about. We talked about budget law. There is out on the Department of Administration, I didn't print out this big old book, but on the Department of Administration, there is budgeting for Kansas cities and counties. There's also some workshops you can go to. I would encourage you to go to them because they're very informative. You probably just want to go, well, you probably want to go to the all-day one, the first one, but if there's any changes in the law that happen during legislation, the morning session always covers that, and then the afternoon session always covers very detailed, this is how you do the budget. So just some main things. What the statute says about budget law is that it applies to all cities and counties. And what it does is it gives the counties expenditure authority on certain funds. So those funds that we highlighted, those are the funds we have to abide by the budget law. Without a budget, there is no authority to spend. So you get down to the end of the year and someone has gone over their budget. If you do not do a budget amendment, they have a budget violation. So you get down to November, you have to start projecting and making sure you can cover payroll, you can cover the expenses. And that's why I said purchase orders are so expensive or so important at the end of the year. A lot of people are trying to spend down their budgets to nothing. And we get to January and we have all these invoices coming in and they forgot that they had them, and so they've overspent their budget. That's where we get in trouble. If you have a purchase order in place, it is basically sitting there saying, hey, I've got this encumbrance. I've spent this money on a service or on an item, and I'm going to hold that money so when the invoice comes in, we can pay it. That's not being done currently today, and that's what's gotten us in trouble over the years. And so if a department head does not come to you and ask you for a budget amendment, you technically do not have to give it to him. Now, it's a ding on you as a commission in your audit. But they, by law, have to come and ask you for more money or a budget increase. So keep that in mind. You have to have funds, and there are certain things that have to be set up by fund. You can't just go set up any fund you want to. It has to be statutorily allowed. And we kind of hit on that the last meeting about some funds are not statutorily allowed, that we've separated them out. So we probably need to address that, and we can address it with a resolution, but that'll be more in our deep budget talks when we get to that point. There are certain exceptions to the budget law, and I talked about this last week too, is it allows for credit for reimbursed expenses. So I'll use the sheriff's office for an example. When we get reimbursed for housing inmates, that's a reimbursed expense. So he can exceed his budget by the reimbursed expense. So those are just things you have to know what the law allows
So
for.
if he makes $1, he can spend an extra $1.
Yes, yeah.
Yep.
All funds should be in the budget document, not the agency funds, but like if we have a trust fund, we have some capital outlay funds, we have some equipment funds, those all have to be in the budget document. But you don't have to project out how you're going to spend them in the budget document, but you do have to have a 5-year capital plan. So that's the law. That's not something we've done very well either. So we've got a lot of things that we need to do better at. I think Eric has done a 5 to 10 year plan, and we worked together on that to kind of project out what maybe debt service might be. And so we've done pretty good on working on
Big yellow equipment.
Yeah. The treasurer and clerk's responsibility in the budget process is the treasurer will set motor vehicle. They send that out to all the taxing entities so they know what numbers to enter into their budget. The clerk takes all the assessed valuation information from the appraiser and comes in and sets the assessed valuation rates to give to the taxing entities. And from that point on, we basically kind of step back, and then it is the taxing entities to prepare their budgets, commission to prepare their budgets, and then all those budgets have to come to the clerk. She has to attest them and then send them to the state. So that's kind of the process on how it works. They really encourage consolidating funds. If it's not necessary to have a fund split out on its own, then don't do it. And last year we took that opportunity. We had in Road and Bridge, we had a bridge and culverts, we had a special bridge, and then we had Road and Bridge. And so we took those two smaller funds and moved them into Road and Bridge. And a lot of that was for cash flow purposes. We were having trouble with cash flow. So ideally it would be to build up some cash reserves so that you don't have that problem in the future. That is kind of just a quick overview of budgeting for that process. My next sheet I'm going to hand out, this is the abstract, which is what the clerk works on every year. And then these are sent out to the taxing entities. This is also on the state's website. I'm hoping to get these all up on our websites. They're really tiny, kind of hard to read, but it will tell you by the college, the school district, the county, what each fund they're levying for and what their assessed valuation is. On the back side of it is, and this always comes into play when we're doing like elections or the NRP, on your tax statement, you get a number assigned to you. And that's that very first column called a tax unit. That tax unit will determine what taxes are on your tax statement. So some people will have a city, some people won't. Everyone will have the county, everyone will have the state, and everyone will have the college. Most people have the extension district, and most people have the SEK library. But when it comes to cemeteries, hospitals, watersheds, townships, those all vary depending on your tax unit. So when a person looks at their tax bill, they need to look and see what their tax unit is, and they can compare it to this, and it will tell them who they're getting taxed by. So holistically, you can't look as the county is responsible for taxes going up. That's not how it works. It's each taxing entity. So give that as just an example for you.
We get the blame.
You do get the blame.
That's because we're the ones that have to collect it.
Yeah.
All right.
Yeah.
All right, we got big.
That's true. This I wanted to give to you so that you can see the history behind assessed valuations just for Bourbon County. I didn't put anybody else in here. And so the far left-hand column tells you the year. We go clear back to 2010 to 2024. It tells you the assessed valuation, and then the next column is what the value is of 1 mil. So for 2024, 1 mil would generate $133,307 for Bourbon County.
For the entire county.
Yes. And so you levied 59.848 mils. So you would take that number times the 133, and that's how much property tax you levied, which was 7.9 million. So I took it a little bit further and I did a year-over-year increase in property taxes. On average, you're increasing taxes $197,000. I'm not saying you're increasing taxes. You're increasing the amount of property tax that you receive. So you may keep your levy flat, but because your assessed valuation went up, you may have received more money that year. And so on average, it's about $197,000 a year that you've been able to generate in extra dollars. That won't even cover a 1% raise for your employees. On average, it's a 2.96% increase. So your cost of goods going up, cost of insurance going up, some things that you just can't control, cost of energy going up, fuel. Those have all been things. Most of those items have taken up these increases when you've given them. So it makes it much more difficult for you to give raises. So this just kind of gives you a history of what's happened over the last 15 years. Ideally, if your assessed valuations are going up, you would think your levy would be going down. That would be in a perfect world. But because the cost of doing business keeps going up, then you have to sometimes take advantage of that. So, if you turn to the next page, I wanted you to see what a mill levy calculator does. And I used a $150,000 home and a $250,000 home just to give you an idea. So, if your assessed valuation didn't change, on a $150,000 home, if you raised it 2 mils based off of last year's levy, on a $150,000 home, it would cost them $34 a year or $2.88 a month to raise it 2 mils. Okay? If you look at a $250,000 home, it would cost a homeowner, and you raised it 2 mills, it would cost a homeowner $57 a year, or $4.79 a month. And this is just on an individual property. And this is with USD 234, Fort Scott Community College, Bourbon County, and the state of Kansas. I didn't throw in any of the townships or anything like that. Now, if every taxing entity is raising it a little bit, then that number is going to be higher. So, but if I'm just looking at Bourbon County, you know, a 2 mil increase would,
So that increase, that $57 is just off what we would assess.
yes,
Okay.
yes.
Yeah.
Now, and it doesn't take
So,
into.
because I mean, when you get your tax deal and everybody's like, well, damn, my taxes went up.
Yeah.
It may not just be us.
It's not, and it's not always just the levy.
Yeah.
It's the housing market. That's a
That affects it
that's
more
a
than anything.
session
Right.
on
Appraised
its
value.
own. I mean, Matt could come in here and really explain and break it down to you why your property values are going up, and he's done that very well in the past.
Because the neighbor sold a $400,000 home for $1.5 million.
Yeah, I mean that's why, and it's set in the market.
Right.
And so, but I also wanted to show you this, what it does to these properties. School districts are levied a little bit differently, so I just put this in for information for you so that you know. On the general fund for a school district, which is usually about 20 mills, the first $75,000 of their assessed valuation is exempt. And so that hurts school districts really, because they keep increasing that number, so they're getting less money. So, but I wanted you to have that information too, because it's good to understand every entity is a little bit different on how they do things. So again, this is just more information for you.
So, you said the first $75,000 of a home's assessed value
For the 20 mills that the school
for the
district
20 mills of the school district
is exempt.
is exempt. So then, for the school district, if you have a $150,000 house, you're only paying tax on 75,000 of it.
Yeah. Of the 20 mills, yeah.
Doesn't make a difference when you're paying taxes.
So.
I know it does, but
Yeah, yeah.
when you
So-
got 14 things hitting you for taxes, it's,
The back sheet tells you the Department Administration explains exceeding R&R, not exceeding R&R. So I tried to put it in a little bit easier format. These are schedules that you can't vary from much. There has to be 10 days in between a publication, between when you publish it in the paper and when you do a budget hearing or an R&R hearing. There has to be 10 days in between. And so I always go to the latest date that we can possibly do it. The items in red are their events. So earlier I talked about the treasurer having to produce motor vehicle estimates. I put that event in. That happens in May. And then the county clerk has to provide the assessed valuation estimates to the taxing entities, and that happens in June. So this just kind of shows you. So if you look at this, you don't have a whole lot of meetings to really get ready for the budget. And so that's why we start so early. You need to have people coming in, presenting, and that's really at your guys' purview how you want to handle that. This is just a guide, but these areas in green, if you do not exceed R&R, you don't raise any more money, which means your levy will go down. It will, because your assessed valuation will go up and your levy will go down. Then everything in green has to be done by that date. Everything in yellow, if you exceed R&R, you take advantage of maybe some of the increase in assessed valuations, then the yellow is your dates that you meet.
could you do an in-between?
There is an in-between.
No, I mean like.
Yes.
Like assessed values go up, but we need to capture a little extra money, so instead of.
You don't raise the full,
Instead of-
you don't keep the levy flat, you maybe come down
Come
a half
down
a
just
mil.
a little bit,
Yeah.
so we still get
You
a
can do
little
that.
extra, but it looks like we're trying to lower taxes. which we are trying to lower taxes, that's
Yeah.
what we try to do, but
Looks like it.
nobody will notice because assessed values went up, but
Yeah. And everybody, it can't be looked at holistically,
I know.
because some people's taxes may only go up 3% and somebody else's might go up 10. I mean,
because
it's,
of the neighborhood they live in.
yes, or because of the comparables, or, so it's, and that's really a session you need to have Matt come in here and really talk through. But really for the next step on your budget is you need to determine when you're gonna start having department meetings, what information you want. And I'm not gonna be the one that is here making recommendations. I am here to take the information and put it into the budget.
How far we at 7 o'clock? We had a 1 hour meeting beforehand. I think every week we just have 2 department heads come in and pitch their budgets to us, and we talk about it and work it out. And if we do that every
So-
week from here on out until we get to the,
We don't know
You won't know assessed,
R&R until,
you won't know assessed valuations until 6/15. So they can still pitch their budgets to you. And then you may have to go back and say, okay, we cannot increase your budget $100,000. We can only do 10. I mean,
and
there,
we're here now, so, I mean, like, we could start doing departments one at a time, really.
Yeah.
I mean, if you wanna tack it onto our regular meeting schedule
yeah, we can do one
as
at
a
a time.
work session,
Every
or,
week from here on out. And we do need to have a couple of standalone sessions.
yes, you'll need that.
Right.
But that'll be kind
But
of
we can
after the
do-
fact that you, once the assessed valuation gets in there, and then first
Right.
round, usually everybody, you throw everybody's wants in there, and you say, okay, this is what it's gonna do. You're gonna have a 6 mil increase. Okay, we need to go back to the drawing table. Now, when you get to that point though, you don't have a lot of sessions that you have time to work through that, so,
Well, that's when we'll have to start adding work sessions and.
yes,
yeah.
yes.
So, but.
I mean, if
don't-
you wanna do 2 every week, I mean, I don't think it's gonna take that long to go through initial phases of this.
Noah, how many departments do we got?
But some of them, like you said, are small budgets
Yeah,
anyway.
some of them are
so they're
fairly
not-
easy.
You're just gonna come
I
in.
mean, we probably need to do the sheriff by himself, probably need to do public works by themselves, probably EMS by themselves.
Those are your three biggest.
Those are the 3 biggest. They got
Right.
the most employees, they move the most money moves through them guys.
And then
And gals.
then depending on, okay, so, and I don't know if you're planning on doing a, salary schedule? Are you planning on doing that?
Want to,
Okay.
Yeah.
So that really needs to be like something you move through pretty fast and get that accomplished, because that's going to determine where departments kind of land in their budgets.
Okay,
And it also affects your employee benefit fund. So none of the departments pay taxes, health insurance, none of that comes out of their budgets.
it all comes out of our budget.
It comes out of your employee benefit budget. So when you have a salary schedule, you can kind of control that a little bit more. Right now, it's not been, I mean, you might have a department head that gives $50,000 in increases, and whoa, we weren't expecting that, and so now you've just depleted cash reserves in your employee benefit fund. You want me to say that again?
No, I got it.
Okay.
I know, sometimes it looks like the wheels are turning slow, but I got it.
You know, for this year, there's 2 funds that I would recommend you move to the general fund, and that's mental health and mental disability, because it's just an appropriation. It's just like any other appropriation that we do. Less funds to have to deal with, and it's all up in the general fund, and you just move those levies over there. That would help you kind of condense it a little bit more.
I think we need to start with our 3 biggest, one at a time. To start, they're gonna have the biggest budgets, they're gonna have the most work to do on their budgets.
was I say, let them, give them a schedule. I mean, send out and let them know that we're inviting them in to,
What information do you want them to bring?
I think we need to know everything they're spending money on, so,
Do you want detail,
yeah.
expenditures,
What's their
for,
planned, I mean, like I know EMS has already started their next ambulance purchase fund.
Well, we've got quotes as far as.
Right, right, yeah. But I mean, we're gonna need to know what are we gonna be purchasing? The
and they've
capital
got a
stuff.
5-year plan too.
Right,
We
that's
worked
what
on
it's-
that
yeah,
last year,
yeah.
yeah. Now, the question becomes, like, we've got a lot of equipment funds. We've got special improvement funds. Do you want to keep those all separated out?
I don't know why we can't put all the equipment in one fund and then
Have like, yeah.
A
like
request.
Equipment reserve fund, yeah.
just do an equipment reserve fund for all major equipment, purchases under one fund, and then if they need
yeah. And if they're working on something that's gonna change from the norm, like we were talking
you saying all
about,
the permits go
lease
under one
versus
fund?
purchase, you got those numbers.
So by law, you can have special improvements, so like, let's say you're buying land or you're doing buildings or, those kinds of things. You can
Elm
have one.
Creek.
Yes, you could do projects, let's say a special projects fund. Again, there has to be a 5-year plan for what you're gonna do with those funds. That 5-year plan is not permanent, it's a ever-changing plan. It's just, this is what we'd like to do, doesn't mean you have to stick to it. You just have to,
I would say also spell out major deviations from last year's budget. If there's something major that they're gonna change this year, spell that out on how
Okay.
that's gonna, so we can look at how that's gonna affect everything.
how many years of expenses do you want?
You're talking about what they spent last year versus, wouldn't that already be in budgets that we got copies of?
You'll have one year, 2023, you'll have expenditures, 24, you'll have estimates, and 25, you'll have projections.
I think your best projections are gonna be
I think
from the
actuals,
following year.
honestly, your actuals and your financial audited statements are the best. And I can get you each a copy of audits for the last 3 years, 4 years.
Yeah, I just say, if we went the last 4, then we're looking at the last session. Yeah.
The last 4 years have been really weird, so I'd say your best comparison's gonna be the year before.
So 5 years? You may go 5 years?
No, I'm
No,
You just wanna go
I think 4, I mean, I
4
think,
years?
yeah,
Okay.
that's gonna give us a good picture of how it went.
Okay,
Some tough decisions got made, some bad decisions got made, we're gonna do the same, so.
yep. Okay, so, and I can print those out, I've got a detailed ledger that I'll just print out and have that ready for them to bring to you. Okay. Anything else you need me to do for you?
So,
Well, so.
one other thing, one of the things I noticed when we were doing the budget session last year, and I sat in on that and was following that, but there was that's what I'd like to see is what are the capital outlays? I mean, 'cause all it says in your capital outlay, X number of dollars, that's what I would like each,
That's
each one.
where, so what you would probably wanna do then is not, if you really wanna know what they are, you could pull them out of every budget, no capital outlay lines, and they go into this capital equipment, capital reserve,
Right.
and then they have to come to the commission to talk to you about those things. That would be more transparent. So when they need to make a request
So the
for,
capital, what'd you call it? The
Capital outlay.
there's
the
capital outlay.
capital outlay funds. If we rolled that back into a special, we made our own big capital outlay fund.
Mm-hmm.
And then we technically kept that money still separate for the sheriff or the EMS or public works. or
You could have
whoever had it.
departments, you could have departments within, yes.
Right.
Yes, you could.
Cause I think like when it comes to patrol cars, ambulances, dump trucks, that stuff, you wanna get it set on a schedule, so.
Yes.
And they already do, so don't mess with what's already being.
Yeah.
Already being done, but I mean, if you end up wrecking a car or wrecking a truck and you need to replace it before you got that money there, cause, hopefully insurance covers most of it, but you
Yeah.
never know.
But those insurance proceeds can go into that fund to help cover
Right.
the
Yeah.
cost, yes.
So you can get the car quicker or the truck
Yes.
quicker, or, so.
I mean, that's completely up to you. You can leave it how it's always been, you can, there's lots of ways you can look at the budget and how you work it. What I tried to do in this budget to make it easier is if there's certain statutes that govern, something that's going on within that fund, it's laid out in that budget document. It's like a leader sheet. And if there's certain changes that happen through the year that you want noted, you just need to let me know. Please note that in the budget document.
I think we need to start working on a
Salary schedule.
both salary schedule and a financial plan, like daily spending limits or, for that stuff we control.
Yeah, the general, yeah.
You had mentioned that to me, and I can email this to you. Riley County has financial policies and procedures. I picked a county because it was easier to kind of relate. They have fund reserve policies, which I've talked about over and over again. They have procurement policies and then procurement codes for federal and state grants. This is something that we're lacking. A lot of times, they ask you when you sign off, what are your policies and procedures, and we don't have any. And so that could get us in trouble when we get a federal grant. That's definitely something that the commission has to sign off on. So I thought that was a good one, another good one. So if nothing else, the fund reserve, the procurement code, and that, and I can send them to you so you guys can look at them. But that's, again, that's up to you guys.
Yeah, I'll
So-
take a look at them.
I will, I'll email those to you. They're out on their website too.
Very good.
I know we put up the handbook in the SharePoint. so
Is
that-
it in the SharePoint
Uh-huh.
now? So
I don't know
you
that
guys-
there's-
Yeah, I've got an email about it. I joined the group.
Right, that's your,
Yeah.
I don't know if there's been any activity in it.
okay. I think we're gonna need to set a deadline on that if we don't get some activity in here.
I think you will have to.
Yeah.
Budget work session. Do we have any other budget work sessions that need to be set? I've got an April 7th one for roads.
And you're going, yeah, because he's gonna come in and talk to us about his hard surface
Should we
roads,
start talking about that plan?
on April 7th, right?
Right.
Okay. That works for that one. Is there anything you guys wanna go over before then or after then, or?
So we're gonna do payroll, we're gonna do, we got that, road services. I think we need to, I don't know if it needs a special meeting or not, but I think we need to be looking at stuff like, the fees that we charge at landfill.
Yeah, we gotta.
Yeah.
we're-
I've got
I've
that
asked
to
for-
bring to the next meeting. It's on the
Everybody, All
schedule.
the
Okay.
department heads.
Just have the
Right.
department heads present their own.
Right, yeah.
What they
okay.
charge based on state statute or what the
Yeah.
county says they do.
Right.
And then we can put something all together on our website that we can do,
Yeah.
get that done.
Well, I'm just thinking that, yeah, revise it maybe. It
Yeah.
might-
Some can
Some
be,
of
some
that-
can't be.
Some of that's set by the
Right.
state.
What,
yeah.
Yeah.
where are we at comparable to what we charge?
Yeah, yeah.
And some stuff is just set in stone by the state, so.
Right.
So do you want me just to put out an email to department heads on when they would like to present to the commission?
Yes.
Okay.
That gives them time to prepare. And they probably got it all on screen somewhere. cutting things.
I wouldn't mind starting next week, but if they need a couple weeks to get ready, then
Yeah.
I wish that's the way we could do it too. We could get it into a position that, you know, next year, 2027, 2028, just repeat.
Yeah. Once you get a calendar set, it's kind of nice. You can just use that same calendar.
okay. Anybody else got anything? This is an open work session, so.
I have a question about the FEMA funds. How are you holding that debt or
We,
expenses, and how will we know when we're gonna get it?
And
Or
for-
if we're gonna get enough?
unfortunately, we've had to spend down a couple of funds that were built up for capital improvements that we were using as matching funds. FEMA's very slow on repaying. I don't know, Eric, have you talked to them lately?
Yeah. Oh.
We did get an email the past couple weeks. They are actively working on everything that's been submitted to them. The last time that we had a face-to-face meeting was looking at probably somewhere June, July, August, before we would see any funding whatsoever, so.
Okay.
And that's early.
So we need to try
Will
to,
you know what you've asked for and what they're gonna give you and the difference?
They're going through that right now, line item by line item by line item, everything.
Because you've
that we-
obviously incurred expenses.
Right, right.
And so we have that over here?
Yes, we have that all documented on a spreadsheet that we have turned in to them.
A lot of your expenses end up being manpower, equipment,
Right.
and they pay at a lot higher rate than they pay at a very good rate. Let's just put it that
So are you paying
way.
that then as real-time expenses then, and what we get from them will be to offset those? Or
Oh,
in
and more.
addition to, so we'll get a windfall? or-
And, yeah, we'll get more than what it truly cost us.
Did you get the?
That's just how FEMA's rate schedule is.
I know they have a federal rate.
Yeah.
Okay. My next question is about the jail debt service.
Mhm.
Do you demonstrate on the budget, are we on track for it to be done in 20 years?
Yes,
And the city is on track for it to be done in 40 years, is that right?
yes,
Okay.
yes.
So we know whether we're on track or not, or we are going to
No,
have
we-
to come up with a?
I have a schedule that goes clear out to 2039 that shows, and it's an increasing debt service, so we have to be very careful with the amount of money we spend out of there. And I know we have, in the past, we've spent some of the cash to help pay for some equipment at the public safety. But in several of the documents, I put in there, we have to wean ourselves off after X, because we won't be able to, that's not sustainable. So unfortunately, you guys inherited that problem. And so you will have to look at equipment reserve funds for those types of purchases.
well,
It
just
would be
out of,
nice to be able to pay that down quicker, or, you know, maybe
just
you
out of
have
curiosity, what's a new patrol car cost?
outfitted.
56? Yeah, 56, 60. Around
Yeah,
there, with
Some,
everything in it.
somewhere between $50,000 and $60,000 for a new patrol car.
yeah,
That's buying a new one, outfit,
If you want a
or,
brand new one, it's like 65.
yeah.
I currently have 3 vehicles, one's over 200,000 miles and 2 right at 200,000 miles.
Well, quit driving it so much.
Yeah.
Tell the bad guys to stop doing it.
And then I'll just ask one more question.
what's a new dump truck cost?
About 325,000.
That's with spreader and everything.
What's a new track loader cost?
Depends on the size.
What's a shovel cost?
$953.
Yeah, $50.
$50. I was gonna say $800.
So for $150, we can buy a wheelbarrow and a shovel?
Yeah.
Exactly. So the hospital sales tax, I'm not sure I'm clear as to, is that accumulating or is that going to be paid out once 3-minute opens the door?
It is, right now it's accumulating. Am I okay to answer this question?
Yes.
Okay,
Yes.
right now it's accumulating. We have December, January, and February setting in a fund. And the reason why by our memorandum, we're supposed to release it as soon as we get it. But we haven't released it because we're still waiting on 2 agreements. And I've talked to the lady that's in charge out there. She's gonna get those to me. As soon as those, are done, then we're gonna release the first couple of rounds of funding. And, we've also asked for, the detailed expenditures, just so that we can kind of see how the money's being
So that
used.
is something that we should be looking at as far as investing for a return?
We won't.
You're gonna be dispersing
Yeah,
it too quickly.
it says it very clearly in there. We have to turn right around within so many days and get it out the door.
Well, that's assuming they do something.
And they called me today that they're gonna have those forms to you ASAP.
Okay, good.
And the only bond that we have outstanding is the jail bond.
No, we have a bond on, landfill. It's a building.
Landfill.
It's a small one.
That's for the one that's closed that we have to hold for 30 years?
No, we are, paying off a building that we had, I think this
We're
is
pretty
the
much-
last year,
We're
maybe.
paying off the transfer station,
Yeah.
building at the transfer station.
Let me get out my debt service, so I can tell you.
Huh?
March of 26 is what I think you'll see for the land.
Yeah.
So, as of outstanding debt, as of January 1st of '24, we had 5.1 million that's still outstanding for the jail. We have 101,000 that's outstanding on the landfill, and the sewer was 625,000. So, that was your January 1st. So you had all of 24 that you paid, and then, so we'll do this
If
again.
you want to build a lift station at the lake, are we gonna add to that bond?
Oh, are they talking about that?
Oh, yeah. I'm afraid so.
Well, that'll have to go, that is a sewer district that is controlled by the county commission, so they'll have to come here.
I think that's all right.
Now, it is a water source, so,
Well,
but don't they all have, they're all individual, they're not lift stations, they're grinder pumps.
But they have a lift station out there where the grinder pumps all bring it to
Yeah,
wastewater treatment plant.
yeah. At one time, they had talked about doing a maintenance fund for that, so that when those start to go bad, we can replace them. That was when I was over at the city. I haven't stayed up on those talks.
Heard of anything about that?
Yeah, I haven't either. I mean, that was a long time, that was a couple of years ago we talked about it. You do have, some, also, it's not bonds, but it's lease purchases, and that's the jail pods. And it is, the principal balance of January 1st of '24 was 1.4 million. So,
it's
those are also
5
paid out of there.
million plus 1.4.
Yeah,
And it's matures in 35,
39.
so it's refinanced. I mean, it's 20 years.
It was, we did do a refinance on it, yeah. Yeah, and the way the sales tax question reads is, the sales tax will be collected until it's paid off. So,
Yeah.
it leaves it open-ended.
Because I don't think
Yeah.
that's not the way it was sold, but it may have been the way it was
Yeah.
done.
Yeah, that's how when you read the statute, that's how it reads, so.
I have a question, and this is not to pick on EMS, but the question is, like, for a new ambulance, what, they're about 500,000 now? I mean, pretty close.
350,000.
Yeah, and then when you're finished with that, they have a projection, how many years out before you can even get it?
3 years. And the problem with that is, so here's your problem with that. When you go to finance those things, if she signs a contract in '25,
That's right.
okay, we finance it in '25. We don't have the ambulance for 3 years,
But you're still financing.
and you're still financing it.
Got it.
So, and that's where there's a problem in the law, because it doesn't account for those things. But you're a cash basis loss, so you have to book it the day that you buy it.
But EMS takes, they're trying to do, like I said, a
Yeah.
five-year plan. Well, this vehicle needs to be replaced, and I'm sure that the road department does the same thing, and the sheriff's department come on board and is doing this. I need X number of vehicles every year, and we're trying to budget for this, you know.
Yeah, yeah.
Instead of having to slam and say, all of a sudden, I need 5 vehicles this year.
Well, and nobody wants to pay interest,
I think
but that's
every
about the only way you can do it.
department's doing that.
They did in the past. I've been to a lot of meetings.
Yeah.
They're starting to do what they're supposed to do.
Yeah, yeah,
Well, I had to start with the inventory.
Like that.
yeah. We've always had inventory. I just
We
don't,
didn't know what it was.
yeah. I just don't think it was
It's gonna
as,
get tougher.
yeah. And the inventory that's presented to the commission is not, it's only property like desks, chairs, computers. It's not your trucks, your vehicles, those things. Those are
It
all,
should be with a usable life.
they are all on your liability schedule. And so how it reads is you just have to do the personal property stuff. So that's and because we don't do GAAP accounting, we're not required to book those on our,
You don't even want to get me started.
I know, but I know that's where you were headed. I've been around you long enough.
What I will say, it doesn't have to do with just vehicles driving anything. The county as a whole, the department comes in and says, this computer is only good for this many years, you know, or this piece of equipment or table. And then that department actually builds in a certain amount of money so they can replace what they use. I know that, I will pick one, Matt, that he has vehicles and stuff, so he's programmed when he needs to do that. Or if he needs a computer, of course, he'll go to the internet technology guy and
Right.
say, hey, yeah, and he's gonna get his.
Who's a
input.
tightwad, I'll just tell you.
Well, I know. He ain't got his first nickel. I got people out there that you can open their wallets and the moss fly out.
I don't know if you were here at the last work
That's mine
session,
too, that's because it's empty.
but he's been here 20-some years, and he's only replaced the treasurer printer. It's on their 3rd printer.
I get you.
So,
I've heard he's replaced a lot of guts in computers too.
we try,
He extended his life.
in most every department, honestly, you're using the back of paper for scratch paper because we can't afford to buy a lot of paper. And so, you just, you make do with what you
So does
have.
each department, order like that off of supplies?
Yeah.
That would be something to consolidate. Have they tried that before?
It would be great to have, but the problem is you'd have to have one person that's checking out
Yeah.
and so you kind of create a job and then
True. That's what I say, has
yeah.
it been done before?
We used to do that at the city, and it ended up, we'd buy in bulk, and then we would distribute it out, but it was a lot of work to keep track of that.
Sounds like a good job for
Huh?
a fairly tall kid.
No, he's got plenty on his plate.
All right, any other
I
questions,
wanna add
comments,
office-
concerns?
One more comment. Whether it's government or whether it's business, you always start off with the same top line. Your sales or your revenues collected. There's only a few things missing in between. And when Susan pointed to that page and said, this needs to equal this, in business, there's 2 things in between there that government doesn't have. One is depreciation, and the other is shareholder value. That's why in a balance sheet, you start with a top number and you end in 0. Because everything goes to shareholder value in between. Does that make sense?
Yep.
So you start with a top number and you're spending that top number down to where you cover all your expenses and no more. That's why they equal. You don't have to make a profit. That's where business differs. If you don't make a profit, you're not going to be involved in the budget process the next year.
But we have no way of really making a profit.
No, but we could account for that depreciation number by having a good inventory of equipment with its usable life and do a reserve. Then you would have the money every year.
But where do you get the reserve? That's why
Well,
I've,
you have to budget for it.
yeah, that's why I've had to preach and preach and preach and preach about cash reserves. It's so important to have cash reserves, and we don't have any. We have zero. I mean, we ended better this year than was anticipated, and that was a blessing.
But every time we've had a major equipment, police cars, dump trucks, ambulances, it's always, oh my God, where are we gonna get the money?
Yeah. But you don't want your taxes to go up either.
No.
So-
Who does?
So it's a joint effort with everybody in the county and trying to conserve. And I sent out an email, I think it was October, because I was doing projections and I could tell we were not in good shape.
That's why I was curious about the bonds.
And I asked and asked and asked, hey, please, if you don't have to spend it, don't spend it. There were very few departments that didn't spend it down to zero.
They would have liked to.
Yeah. Yeah. But there were very few. And so, and it may have been they had a year that they didn't need to go to training. I was talking to the previous clerk about training for the clerk, and I keep getting all these emails, you're required to go to this training. I'm like, I don't have the budget to go to this training, but I have to be certified to run elections, to do whatever. And so, that's another one of those, I feel like, state mandated things that's unfunded. And so it makes it really hard.
State has a $4 billion slush fund.
Yeah, well, and it makes it really hard because you come to the commission and you're like, I really need this money, and they're like, no. But there really hasn't been opportunity to explain why. So we've not done a good job of that either. So I think there's lots of room for improvement to really make this a conversation.
Okay, thank you.
Yep.
Any more? Good.
Well, I'm talking
I've been leaning towards the
about-
door.
No, I
Well, I
don't.
don't have to adjourn it, you just get up and leave, this is an open meeting.
I know,
Yeah.
but I don't wanna be rude.
Well, sometimes doing the right thing is rude.
They